Hey everybody, Smart Silver Stacker here. Hope you're doing well. So as always, the silver market is a volatile one, and silver's volatile nature was on showcase today as the spot price of silver fell about 3% on news of a hotter than expected U.S. producer price index, which was up about 0.4% on the month. That was against expectations of 0.2%. Now, the PPI is a measure of prices that producers receive for their output. So it measures inflation at the wholesale level. And this is a leading indicator of inflation. Oftentimes, when the PPI is up, consumer prices will rise in subsequent months. Now, we also got this week the CPI numbers for November. Year over year, the CPI was up 2.7%. That is the highest reading in 7 months. So you've got inflation up, resuming its upward trend. And at the same time, silver is down today. So what's the dynamic here? Well, a lot of this has to do with the anticipation of what the Federal Reserve is going to do next. But there's a lot more going on right now than just soaring inflation. In fact, the inflation is merely a symptom of a much bigger problem in our economy. We're going to get into it in today's video and how this is going to affect the US dollar, Fed policy, and gold and silver prices. We're also going to get into some of the recent geopolitical developments because they tie into this as well, and they are quite significant. So buckle up, we got a lot to cover, but stick around, you won't want to miss this one, and let's get to it. Did you know SD Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at sdbullion.com/sweepstakes. Okay, so that bigger problem that I am referring to in the US economy is that the level of debt is absolutely exploding and US deficits are soaring. So just last month, we got the data from October from the US Treasury, and the deficit in October was an absolutely eye-watering $257 billion. But we managed to top it with the most recent data from November, when the deficit came in at $367 billion. So for the first 2 months of fiscal year 2025, that is a cumulative deficit of $624 billion. I mean, just let that sink in for a moment, just how much money the US Treasury is hemorrhaging every month here. More than $500 billion in just 2 months. And if you just annualize this rate of deficit spending, it comes out to about $3.74 trillion annually. So that gives you an idea of why the Federal Reserve, despite the hot inflation readings that we are getting, is widely anticipated to continue their rate cuts at next week's FOMC. You see, they absolutely must cut despite the fact that inflation is once again on the rise. And I want to delve into what this scenario could wind up looking like because it's not going to end well. But real quick, I do want to remind you that you can sign up for my free e-newsletter with a link down in the description. If you like getting timely updates about this type of development in the economy and about gold and silver, make sure you check that link out and sign up. So the potential scenarios moving forward here are that we have absolutely runaway spending. I mean, that's already in the works, but this is going to force the Fed to ease into rising inflation. And with the level of deficit spending that we are witnessing, it won't be enough to simply cut the federal funds rate. It's very likely that the Federal Reserve will have to intervene and begin buying this debt directly, because the problem is that the Treasury is just going to run out of buyers for this debt. And when that happens, interest rates are going to absolutely soar. That's what happens when you borrow too much and you have a hard time finding buyers. Rates have to go up in order to incentivize more buyers to come into the market to lend you cash. When you run out of buyers, the buyer and lender of last resort, of course, is the Federal Reserve. Now, if you take a look at the CME FedWatch tool, it looks like markets are almost universally convinced that there are more rate cuts coming, and they probably will have to, as we mentioned, because of the runaway debt. But what's going to happen here is, in the face of this easing, you're going to see inflation begin to take off again. You're already seeing that in the CPI readings from this week and in today's PPI numbers. But what markets are getting wrong about this is they see this inflation and they think, well, the Federal Reserve maybe is going to be more hesitant to cut in the future because of this rising inflation. But because of the debt crisis, the Fed is backed into a corner. Now, they may be forced to abort their easing if inflation becomes a sufficient enough problem. But if they do that, it's going to lead to an economic disaster and a complete collapse, because the problem is that the interest cost on the debt is absolutely soaring. It is now the second largest item on the federal budget, and it is continuing to grow. As more and more money gets borrowed, as more debt gets piled on, the interest continues to climb. And the only way the Fed can get this under control, the Fed and the Treasury in cahoots, is to have the Fed intervene to bring interest rates down. But again, that runs the risk of soaring inflation. And currently, I know there's been a lot of talk about the DOGE, the Department of Government Efficiency, headed up by Elon Musk and Vivek Ramaswamy, and Donald Trump. They're all going to come in here and they're going to fix all of this. And well, all I can say is that with this level of deficit spending, they're going to really have their work cut out for them. And right now, I will say they are talking a good game. I will give them credit for that. I hope that everything that they're claiming they will be capable of accomplishing is, in fact, going to happen. But the thing is that these guys, while they might have good intentions, they're not wizards. They can't magically undo this problem. And it is possible that they simply cannot cut spending sufficiently to bring us back from the brink of disaster. It may be possible that we have already crossed the event horizon of the debt black hole. I mean, just look at the other biggest expenses on the federal budget. You've got healthcare, defense, and Social Security. This is all pretty much sacrosanct stuff. I don't know how they're going to manage to have the political cover to cut this type of spending. If you're out there watching and you currently collect Social Security, or you've got that coming to you in the near future, how many of you are willing to give that up to prevent the debt cycle from collapsing the whole system? I mean, I don't think there's too many people in the US who are willing to give up whatever government benefits they are entitled to in order to save the system. And therein lies the problem. There really isn't a lot of discretionary spending out there that is up for cuts. Most of this stuff is politically completely unviable to cut, and that is unfortunate, but that is the situation that we find ourselves in. Now, speaking of defense spending, that is a big item on the national budget, and I want to just talk briefly about why that is very unlikely to be cut over the next 4 years or at any time in the future. I mean, there's two things that make me say that. Of course, there's a lot going on in the world in terms of defense and geopolitical crises, but today I just want to focus on two things. So you've got the fall of Syria, which has played out over the past week or so. You've got the Middle East being thrown into chaos as the Assad regime is collapsing. You've got Turkey and Israel basically dividing up the country. There's general disorder in the region, and the US has already spent billions, tens of billions, hundreds of billions in this region over the past year or so, and I don't think there's any sign of that stopping with this collapse of the Syrian regime. Syria now has the potential to become a breeding ground for extremists, the rebels who have ousted Assad. From what I understand, they are an offshoot of Al-Qaeda. There's weapon stores all over the country, although Israel has been doing its best to destroy those in order to prevent them from falling into the hands of militant groups. There's still a lot of weapons there. There's even chemical weapons. And this situation may become similar to the U.S. withdrawal from Afghanistan, where we left behind huge stockpiles of weapons for the Taliban to seize, except this time there are potentially even chemical weapons, weapons of mass destruction, which may work their way into the wrong hands. And also, from a balance of power situation in the Middle East, you have got Iran's allies now collapsing. Syria was part of their quote-unquote axis of resistance. You've got Hezbollah, which has been significantly weakened by their conflict with Israel. That's part of why we saw Assad fall. It was because Hezbollah couldn't come to their aid the way they did in the previous revolution attempts. Russia also has their hands tied in Ukraine, so they weren't able to offer assistance. And so what you're seeing is Iran's allies just kind of dropping, falling away one by one. And if you look at this from strictly a U.S. or Israel-centric perspective, perhaps this is a good thing strategically in the theater. but this could actually make the odds of a broader conflict more likely. On the one hand, you have a weakened Iran that may lash out, it may decide to go through with developing its nuclear weapons because it feels like it has no other option. And on the other hand, you may have Israel and the U.S. who sense weakness in their geopolitical rival in the region and decide that now is simply the opportunity they've been waiting for to launch a full-scale war against Iran at a time of weakness. And, recently we've had these bizarre stories coming out of New Jersey surrounding drones that have been spotted flying over the state. Now, from what I've read about this and what I've come to gather is that these are very likely manned craft, small manned craft, or perhaps drones being operated in some capacity, probably by the U.S., maybe testing. Nobody knows for sure, but recently there was a New Jersey representative, Jeff Van Drew, who claimed that this was the result of an Iranian mothership operating off the coast of the U.S. We can't be sure what these drones or craft are, although they do seem to operate with FAA lighting requirements in mind, so it seems unlikely to me that they're of Iranian origin. But, you see this kind of bizarre paranoia and this kind of story in the news about Iran. I think you can take that as a sign that war is not far off, and we are likely headed for a war with Iran, and that is going to get very expensive. We've already spent hundreds of billions of dollars in the Middle East, bombing Yemen, intercepting missiles and drones launched from Iran, but a full-out war occurs in the Middle East, and we are not going to be cutting defense spending. In fact, likely it is going to soar. So the bottom line here, folks, is that the reaction that we got in gold and more in silver today with the drop on this hot inflation data, this is really just noise. To me, it's a buying opportunity. Really, it's a gift to stackers. I'm not telling anyone what to do. This isn't financial advice. But the way that I see it, now is the time to get hard assets outside of this collapsing system, because none of this is going to end well. And that means that safe havens are going to be in high demand. So if you'd like to see more videos like this one, check out the video that is popping up on your screen right now. Don't forget to click that link down in the description and sign up for my free e-newsletter, and I will catch you next time. Stay safe and happy stacking, everybody. Smart Silver Stacker, out.